The word strategic Bitcoin reserve to the casual observer they sound like a stockpile of an asset. To a closer observer, it sounds like a stockpile of the most valuable asset the human race has ever invented. But I'm here today to show you how the strategic Bitcoin reserve represents a strategy for United States digital supremacy in the 21st century. The president, with his vision, has established a strategic Bitcoin reserve as of last week and has declared that America will be the Bitcoin superpower. That is prescient. I would hazard to guess that the great majority of the people that saw that post don't even know what Bitcoin superpower means, and they haven't really considered it. I was inspired by the words, and that caused me to put together this presentation today. Why is Bitcoin critical to the prosperity of the United States in the 21st century? That is the question we all should be asking. There are many metaphors for thinking about a strategic reserve of Bitcoin. Bitcoin is digital capital. If we thought of it as Bitcoin as digital capital, is this a stockpile of cheese? Is this a stockpile of oil, natural gas, or even uranium, all of which would be interesting? Well, at its worst case, in its narrowest form, you could think about the strategic Bitcoin reserve as a stockpile of the apex asset of the human race. And so what's it?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Michael Saylor, Executive Chairman of Strategy, passionately discusses the transformative potential of Bitcoin at Bitcoin for America. Join us to explore how this digital currency can impact the nation. Let's dive deeper together.
Well, over the next 20 years, I think it's worth anywhere from $3 trillion to $106 trillion to the United States. U.S. corporations, like my corporation, are actually recapitalizing on Bitcoin. We've gone from having $250 million of assets 48 months ago to having nearly $45 billion of assets in 48 months. If you look out over the next 20 years, corporations that are accumulating Bitcoin on their reserve, like MSTR, like Mara, like Riot, they're going to have $20 to $40 trillion. So this is a small metaphor, but it's a powerful metaphor. But, you know, it's hard to rent out or finance or develop your cheese or your gold or your natural gas buried in a vault. So a more powerful metaphor is Bitcoin is digital property. If you own 5% of Manhattan and your family owned it for 100 years and someone said, how are you going to pay your bills? You wouldn't say, we're just going to sell it. You would say, we're going to rent it. We're going to develop it. We're going to put a building on top of it, a business on top of it, or we're going to finance it. We're going to borrow against it. The same is true with Bitcoin. In 20 years, the United States could be generating $10 trillion per year by renting, developing, or financing the assets in that strategic Bitcoin reserve. The AIs are coming. The AIs don't get bank accounts. They don't get credit cards. The AIs, the artificial intelligence economy, will be built on digital capital, digital property. It'll be a $100 trillion economy. It'll be built on Bitcoin. Well, a lot of people, they think of it as an asset. You think of it as a property, but what we know to be true is that Bitcoin is actually a network, and it's not just any network. It's not an information network. It's an energy network. It's a conservative network. I can send $1 billion from me to you. I lose it. You have it. That is the conservation of energy in cyberspace. So when you start to visualize Bitcoin as a digital energy network, what you realize is that trillions of dollars of digital commerce will flow over that network. The banking system of the world is going to rebuild itself on a digital energy network. We're going to have 40,000 banks that'll be settling with each other in real time, finally, moving billions, tens of billions, or hundreds of billions of dollars an hour over a pure digital network, right? So if you look at the world and imagine digital energy moving around the world, and then you ask the question, would you want to own it or would you want to ignore it? It's an important question. And of course, I think some of you might have seen the cyber blackout of X yesterday and all the cyber attacks. The last and most important metaphor is when we have open digital energy flowing, it is a commerce network. But when we reverse that digital energy into a shield, it becomes a defense system. Bitcoin's a digital defense system. Bitcoin messages, data authentications, transactions, they're unstoppable, uncorruptible, immutable, immune to tampering by any known cyber threat. You can protect the United States commercial and military and financial systems behind a wall of digital energy. And that's exactly how we will do it. Even Elon Musk pointed out, the AIs don't know how to hack Bitcoin. They can spoof you out of your money. They can convince you that there's someone they're not. There's no way to trick an 800 exahash digital wall that's based on modern encryption. The AIs won't get.
Bitcoin's market might be gearing up for a rebound, thanks to the big players or whales who are starting to show renewed interest in buying. Despite a general wariness from smaller investors after a rough few weeks, the shift in whale activity on Binance, one of the largest cryptocurrency exchanges, suggests a cooling in sell-side pressure, which could signal a market recovery. Recent data from the on-chain analytics platform, CryptoQuant, points to a significant change. The proportion of large inflows to Binance by whales is declining. This shift is essential as it indicates that whales are reducing their selling, which historically has been a precursor to bullish market trends. Observing these patterns, especially in an exchange as significant as Binance, offers valuable insights into potential market movements. Despite these promising signs from large-scale investors, overall market sentiment remains tepid. The lackluster demand at current prices, highlighted by analytics firm Glassnode, underscores a cautious environment. Their data reveals that short-term holders are experiencing a transition into net capital outflows, suggesting an increase in sell pressure that could prolong the market's correction phase. As Bitcoin hovers around $80,000, the atmosphere is one of hesitation rather than enthusiasm, with new buyers reluctant to step in. This dynamic paints a picture of a market at a crossroads, with its future direction likely hinging on whether whales continue their current trend of accumulation. If they do, we might just see the market spring back to more robust levels.
Through that, what's driving the growth of Bitcoin? It is the most powerful force in the world right now. It's growing nearly 60%. It's become the eighth largest asset in the world. It's about to become the largest asset in the world in the next 48 months. What is it? It's all of the smart money in the world running from risk, running from the past toward the future, from something less secure to something more secure. And they're doing it in the most visible way with their capital. This is a map of the wealth distribution in the world, about $900 trillion. If you break it into uses, half of it is just a store of value. We're long-term, we're preserving our capital for the long term. We just want to keep our money. The other half are assets held for utility. I want to do something with the asset. If you drill into the 450 trillion, you realize the problem is that long-term capital is being dissipated and decimated by fires, by floods, by famines, by tariffs, by wars, by competition, by rust, by obsolescence, by torts, by traffic, you name it, right? What's that cost? That costs $10 trillion a year. There's people go, well, what is Bitcoin's use case? The use case is to not suffer $10 trillion a year of damage from entropy, from inflation, from chaos, from the future.
Is another Bitcoin price crash on the horizon? The cryptocurrency world is buzzing with speculations as key on-chain metrics and market patterns suggest a potential dip in Bitcoin prices. Currently trading at $83,700 after a recent low of $76,600, Bitcoin is facing critical resistance near the $84,000 mark. This level of volatility raises the question, could Bitcoin's price fall even further? Bitcoin's price dynamics have been heavily influenced by spot Bitcoin exchange-traded funds, ETF outflows, which have surpassed $1.5 billion in the last 2 weeks alone. This significant outflow indicates a decrease in investor appetite for Bitcoin, a sentiment echoed by the low apparent demand recorded by market intelligence firm CryptoQuant. Apparent demand measures the difference between Bitcoin's production, driven by mining, and changes in its inventory, particularly the supply that has been inactive for over a year. A negative apparent demand, which was observed for the first time since September 2024, suggests that production is outstripping long-term holdings, adding pressure to the price. Interestingly, a similar pattern was noted back in July 2024, when Bitcoin's apparent demand was at comparable levels before the price plunged by 30% to $49,000. While these metrics indicate potential for a further downturn, it's crucial to remember that market conditions can change, and previously, negative apparent demand has also preceded price rallies. Further compounding the bearish outlook are various valuation metrics. The Bitcoin bull-bear market cycle indicator, a momentum metric, is currently at its most bearish level in this cycle. This indicator, along with the MVRV ratio Z-score, used to determine whether Bitcoin is overvalued or undervalued, both suggest that the market might be gearing up for a deeper correction. From a technical perspective, Bitcoin is also forming a bearish continuation pattern known as a bear flag, which typically suggests that a drop could be imminent if the current support levels fail to hold. The target for this bear flag points towards a possible drop to around $68,400, which would be a 17% decrease from current levels. Moreover, if the support zone between $75,000 and $78,000 does not hold, prices could plummet even further to as low as $63,000. Despite the gloomy forecast, the crypto market's unpredictability means that vigilance and readiness for any scenario are crucial for those invested in or considering investing in Bitcoin. As we watch these developments unfold, the next few days could be critical in determining the short-term trajectory of Bitcoin's value. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.